You're listening to the Wealth Mindset Show, where Hicks and Zerker Capital Management's team of finance professionals, portfolio managers, and a life coach come together to tackle complex topics in finance and retirement planning so you don't have to. From investment strategies and wealth management to tax planning, retirement income, and aligning your money with your values and purpose, the Wealth Mindset Show offers the tools to thrive.
All right. Hey. Welcome to the Wealth Mindset Show, where the Hicks and Zerker team will have conversations on managing wealth, navigating retirement, and making smart decisions for a secure, meaningful future. I'm Austin Wilson, Chief Investment Officer at Hicks and Zerker Capital Management.
I'm Josh Robb, Director of Wealth Management at Hicks and Zerker Capital Management. And as we kind of are heading into a new quarter, that's kind of what we're going to be talking about today, the last quarter. What's going on in your life? Anything new? Anything changes?
Well, we got a lot of rain recently.
Got a lot of rain.
So we're dealing with old house rain stuff.
Yeah.
Which is always fun, but got my yard going again. It's always good to get out there and green it up a little bit. Kids really like being outside on the swing set.
That's so nice when you can be outside
when the
fresh
weather's
air.
warm. So yeah, our 3-year-old specifically is just like, Mommy, Daddy, can I go outside and play? We're like, yes, please do. Go outside. So that's going well. And yeah, the kids are just keeping us busy. We're about to start Miracle League Baseball.
That's always fun.
At the at Miracle Park for Juliana here actually in a couple weeks. So we're excited about that.
They do a good job there.
They do a great job. It's such a cool program that they have going on there. And then our middle one's doing baton lessons.
Ooh, there you go.
She's going to be in the Memorial Day Parade.
There it is.
Which, how do you wrangle? She's not the youngest. She's 3. Yeah. There's people like smaller and how are you going to wrangle?
They just follow the crowd
in a parade.
Just follow the crowd. They're just going to follow the flow.
Somebody like, I don't know. I'm not going to put a chair and watch her. I have to like reel her in the whole way. I don't know.
That's funny.
That's going good. What about you?
Well, weather gets nice. We got a lot of kids in our neighborhood. We're at the end of a cul-de-sac. And so historically, that cul-de-sac turns into a kickball, wiffle ball area, because you can be at the bottom cul-de-sac, hit outward, and you're pretty much at their area. It's, a lot of the younger kids, they're not going to be sending it far enough down to do much damage to anything. And they're using wiffle balls or kickballs. The problem is, like, I'm coming home from work, bunch of kids in the road, they got to move all the bases, every time I drive. So somebody, one of the adults, and I think this is a great idea, spray painted home plate, first, second, third, and a pitcher's mound.
That's a really good idea.
Not like super bright, just like a gray, but it's there.
Yeah.
And it's there. So kids can leave, car comes through, they run back out, starting the game. They don't have to reset all the bases.
That's good thinking.
And it's fun. I mean, there's 15 kids running around out there, and sometimes the dads get out there, get involved. It's fun.
Sliding
it's
into
right
home
there. Don't slide on the cement, the blacktop. That is no good. But they have a good time, and I like that it's right there. Keep an eye on the kids. They're having fun.
Yeah.
I love this season.
It'll even pick up speed more as we get. I mean, weather's just now turning.
Yeah, it's just, you get a couple good days and some bad days.
It's going to be crazy for y'all. So that'll be a lot of fun.
Yes.
So today we're actually starting a new series.
Yes.
And this new series is something we're hopefully going to do most quarters.
Yeah.
Where we look back at, hey, what happened during the last quarter? Because guess what? We just finished up Q1.
Yep.
The first quarter is in the books now.
Of 2026.
So we're going to say, hey, what happened in the first quarter of 2026?
And we've done this with the year, but never kind of broken it down for a quarter.
Because if you look at a year, a lot happens.
And we only hit a couple things.
But if you look in a quarter, you can kind of get a little bit more in-depth of what happened. So, yeah, this is what we're going to be doing. And we can also give you some insight, some tips maybe of what we're going to be looking at going forward from here. So let's start with the markets, right? That's what we look at. So talk about how did the markets do in the first quarter?
Yes.
Well, it was a challenging one, and we're going to get to why. The Dow Jones Industrial Average down 3.85%.
Yep.
S&P 500 down 4.54%. Small cap stocks down slightly, 0.14%. The NASDAQ, so think more tech-oriented, down 6.94%. International stocks outside the U.S. up 0.34%, and bonds were up 0.16%.
So what you see is that the Dow being the most value-oriented conservative of the
three
US
major U.S.
was down just under 4. S&P 4.5, and then the NASDAQ
7.
down about 7.
Right.
And so you're seeing that trend, that growth. The tech side is what was experiencing more of that volatility this first quarter.
And the question would be why?
Yes.
So why would tech have been underperforming the broader markets, underperforming stocks outside the U.S.?
And not just why tech, but what did you see going on in general There were some shifts and some changes.
What made tech underperform is what broader happened, right?
Yes.
So in Q1, it was actually, if you think about what happened earlier in the quarter, we're all hung up on Iran, which we're going to talk about.
Mm-hmm.
Iran didn't start till like end of February.
Yep.
So you actually had 2 full months where some rotation was already occurring.
Yes.
And that rotation was some of these high-flying tech stocks from the last couple of years, specifically the really large ones, started to lag.
Mm-hmm.
And a lot of that was due to, expectations were very, very high. Valuations were relatively elevated. And obviously, we still have yet to see any real earnings come through from AI, which is what all these stock prices are popped up on.
Ran out of things to price in until they could see actual results.
So they're like, well, let's wait and see. And really, they didn't do awful. There was just, they underperformed the rest of the market, and the rest of the market played a bit of catch up. The value side of the market played a bit of catch up, and it had lagged very badly for quite some time now.
Small caps
and mid caps outperformed. Real estate outperformed. All the defensive sectors, utilities outperformed. These sort of things. Tech just decided it was negative, but it was not like down 7% in the first couple months. It was down a little bit, and some of those mega caps pulled back a decent bit. So why did it continue is a different story. So at the end of February, so again, this was already kind of occurring.
Yeah.
At the end of February, the U.S. decided, Iran has nuclear capabilities. We don't want them to have that. We actually talked about this a while back, and they really haven't done anything about it. We don't want them to have that.
Yeah.
We're going to bomb them and make them not do this. So we started a conflict with Iran, and with the intent of eliminating their possibility to have this, which Iran's not great, typically. They have a lot of state-sponsored terrorism and not good leadership, and they make some poor choices in who they support, all this other stuff. So they're not our good friends to begin with, but we've tolerated a lot over the years because they are really critical for what? Oil, right? They control the supply. They do some oil production quite a bit on their own, but they're also very key in oil movement around the world. The Strait of Hormuz is right off their coast, and that is really where about 25% of the world's oil traffic goes through.
Yep.
And so they can kind of control that. So they're very, very important to that. So we decided we're going to try and force them into giving up their nuclear capabilities and force some change there. And what did this do? Well, it sent oil through the roof, which is not surprising because of how much of the world's oil supply.
That wasn't a surprise, yeah.
And it's just continued to shoot up and shoot up and shoot up, really through the end of March. We're talking oil was up 50, 60% in a month.
Yeah.
Or which is really year to date because it really didn't move much before that. But what that did is it sent inflation expectations higher. Because, well, guess what? If oil's higher, then gas prices are higher. And you've probably all seen gas prices. They were up to about $4 a gallon around here. They've pulled back maybe just slightly, but they're still right under $4 a gallon. They were $4 per gallon nationwide, which was a huge increase from where we were at the beginning of the year. We were also fighting at the same time. Naturally, at this time of year, gas prices go up a little bit anyway into summer.
Yes, they switched to the summer blend, and it's more expensive.
And demand goes up. So we were already fighting. That was probably going to be happening anyway, but this is really what caused gas prices to go up. And as gas prices and these prices of goods goes up, because everything that flows through that, inflation goes up. So we've already started to see some inflationary impact of this.
And there's not an alternative, right?
Not at this point.
So, a couple of years ago, egg prices were real high. Well, you can switch proteins and, or if, beef gets real high, you switch to chicken. But if oil goes high, gas, there's not an easy alternative to switch.
Not quickly.
It's not like my car can take anything else. Now I can switch cars and get a hybrid or an electric vehicle, but it's not an easy switch on what I have. Yeah. Whereas food prices, those things, you can make your own adjustments to counter inflation.
Yeah.
Gas, you cannot.
You
can slow your consumption of it by traveling
as much as you can,
but you still are. It's essential for travel for most people at this point.
So what all this did was it really put upward pressure on bond yields, and that is unfortunate because bond yields are very, very impactful for things like growth stocks. This is why growth stocks and tech underperformed. Right? We're all discounting future earnings to today, and when yields go up, that makes them worth less, right? That's how that works.
Yep.
So that is why the tech side of the market was much more under pressure than everything else. In fact, really one of the only things that worked through the first quarter was energy.
Yeah.
Energy was very high because Well, all of a sudden, oil
got more expensive.
Oil got a lot more expensive. They're able to make a lot more money. They're more incentivized to bring more production online, all kinds of other things. So that was really the only bright spot in there. But that is why the tech side of the market was under more pressure in the first quarter. And we actually saw that pressure just kind of continued through the end of March. And around the end of the March 30th, I believe, was the bottom. Because right now, as of today, we're recording this on tax day, by the way, the 15th.
Get your tax returns in.
On the 15th of April, so this is 2 weeks from the end of the quarter, we have now gotten back to all-time highs for the S&P 500. That was not the case 2 weeks ago, by the way. Yeah. We were flirting with, and we never hit, but we were flirting with correction territory, right? That's a 10%.
I think the NASDAQ got it.
NASDAQs and small caps got to correction territory. The S&P never did. But we were getting the upper single digits, certainly. And now we're back to where we were. And what happened? Why was there a turnaround? And the turnaround was, there's this market theme right now where it seems like when markets get pretty weak, there is some pressure on the current administration to change things pretty quickly. And that happened. Around March 30th, it was Trump was like, well, I guess things aren't looking so good. This is really impacting things. We're going to soften things up a little bit. We're going to work towards a ceasefire. And anytime you got a whiff of good news on ceasefire with Iran, the market rallied from there. And we're kind of in this quasi ceasefire right now, a couple week period where we're trying to work things out. But we'll see how things linger from here. But that is what has caused such a sharp rally in the last couple weeks, pretty much back to where we were. So yeah, that's where we are. That's what happened in the first quarter. That trade, the buy the dip trade, is real. It really worked again. In fact, that buy the dip trade has worked for the last few years pretty strongly.
Anytime you see a dip, there's been a
people have been wanting to put money to work.
Yep.
Yeah. So that's what I saw from the markets. That's what drove the markets. Obviously, Iran towards the end of the quarter was hugely impactful. But I do want to reiterate, there was already a bit of a rotation going on before that. We just saw this exacerbate that, right?
Have you ever felt overwhelmed by the complexities of managing your wealth? At Hicks & Zerker Capital Management, we specialize in helping affluent families and individuals navigate the complex challenges of managing their finances. Our process is designed to guide you toward what truly matters. Achieving your dreams requires careful planning, smart decision-making, and access to high-quality investments. That's where we come in. We understand that complex financial situations call for deep expertise in investing, tax strategies, and retirement planning. But our approach goes beyond that. We integrate your financial goals with your core values, helping you visualize the possibilities your wealth can create for a secure future. If you're ready to take the next step, visit hzcapital.com/start to schedule a call with us. Again, that's hzcapital.com/start. Now let's get back to today's episode.
So, Josh, let's flip the page.
Yeah.
In terms of individual investors, in terms of investor mindset and investor behavior, what are clients asking about?
Yeah, so the first one was just when the Iran conflict first started was kind of the idea of, okay, what does this mean for us?
Yeah.
Because again, Middle East, a little ways away from where we are. Overall economic impact, especially in the short term, minimal. You got gas price change, but it really doesn't disrupt our lives.
Right.
We're not seeing much different. Gas is a little more expensive, but it's not changing much.
Yeah.
And so the question is, what should I expect? And so we looked at kind of the historical trends of Middle East conflicts, which this is not the first and probably won't be the last.
Or the third, or the 50th.
And so the idea is just, okay, here's the things that historically have happened, things to look for, anticipate. And then, the big question is just anything in your plan change based on this?
Yeah.
The answer is
probably
no.
not.
Probably not.
Yeah.
And if so, then what adjustments do we need to make? But for most people, let's say you're 6 months out of retirement. Is this now a good time to retire? Well, just this Middle East conflict in and of itself is not a reason to change your retirement plans, because this is always going to have something. There's always going to be something. There's never a period of time where everything is perfect, and that's when you pull the trigger.
Right, exactly.
And so the idea really comes to is anything that I've been planning on, has that been changed or disrupted that I make an adjustment to? And if the answer is no, then although it's no fun to sit through that volatility, it really doesn't have an impact on you. Hopefully go to my example of retirement, hopefully you've prepared by creating a little bit of cash, having a little bit extra cushion there for that exit point and into retirement, so you're not forced to start selling right away of some of those highly appreciated assets that may be down a little bit.
Yeah.
But overall, most of the clients are just, okay, is there anything else going on, or will this be a domino into the other things? And, so far it really has yet to show that being the case. Again, everybody comes back to inflation. I think part of his 2022 was just so rough with high inflation that the fear is, oh no, what if we start heading back that direction? And I don't think this in of itself will do that. Get us to that. Again,
well, and even
high oil prices alone is not going to.
And even if you think of how this impacts monetary policy, which is what we would be looking at, how does the Fed look at this? They understand that their tools at their disposal, which is really a balance sheet that they use a lot more than they probably should, and interest rate changes. Neither of these address an oil shock. No. They can only control demand, so they can make money cheap and easy to flow and easy to buy things, and debt easy and cheap. Or they can mess with their balance sheet, which we're not going to get into.
Yeah.
But though it does not address an oil shock,
didn't fix anything.
So what they're probably going to do, we walked into this year saying, hey, we're probably going to get a couple interest rate cuts.
It's not going to do it.
They may still have a cut. Markets are kind of like maybe one. It seems unlikely they're going to get aggressive on cutting just because inflation is probably going to be temporarily elevated. But are they going to go out and hike? Heck no.
Not yet. There's no reason to.
The labor market is solid, but not like gangbusters like it was a couple years ago. So they're not willing to weaken that any further. So I think they're just going to be able to look through some of this data and say, okay, we can't fix the problem here.
Yeah.
We're going to hold for a while. So next, we're going to go talking about some good news. There was some good news.
Talk about some good stuff
in the first quarter, and we're going to kind of go back and forth on themes here. But first up is animal news.
Animals.
Good animal news from Q1 2026. Giant pandas no longer classified as endangered species by the IUCN. Wait, that's pretty great.
If you've ever watched anything about pandas, they're an endangerment to themselves.
Have you seen them fall?
Oh my goodness, they're hurting themselves right now. They're not endangered from anything else but their own ability to survive. I mean, they're just even they choose the bamboo, right? That's their thing.
That sounds so prickly.
Well, it's not efficient. Like they're just making horrible life decisions. But I'm glad to hear them.
Yep. So off the endangered species list.
That is good.
Number 2, Brazil's iconic blue and yellow macaws returned to Rio de Janeiro after 200 years following some successful rewilding efforts.
That's cool.
Rio de Janeiro has the iconic blue and yellow macaws back after a couple hundred years. That's pretty awesome.
Yes. Always cool to see that recovery of
species
that were heading the wrong direction.
Yeah.
If we flip to more environmental, a couple things now. Growing up, ozone. Were you like, was this big for you? Like, be careful, don't use hairspray. You're making a hole in the ozone.
Refrigerants and all that too. Yeah.
So, for me especially, I'm a little older than you are. Growing up, that was like this huge thing. It's like aerosol. Don't use aerosol can. And as a kid, I remember growing up thinking, they kept talking about these hole in the ozone layer. And I just kept thinking you would see like space because, there's this hole now in the sky. Oh no, everyth's leaking in, You're going to get acid rain. That was the other thing. It's like, I'm going to walk out into
dissolve.
What's happening? Well, good news. The ozone is healing faster than they expected and is potentially on track to fully recover in the coming decades, according to the Global Monitoring Agency.
Hey, that's good.
Hey, there we go. All that
fully recovered.
Lack of aerosol hairspray. I think that's what killed the 80s hairstyles was like, we can't do this. As cool as the hair is.
You stopped using hairspray just for that.
Just for that reason. That was the only reason I stopped.
That's right.
Yeah. And then the other side, which again is an awesome thing. So Norway, for a long time, has had very strong forest protection policies, and they have maintained a deforestation-free status for over 10 years, for over a decade.
There's a lot of trees going on over there.
That's pretty cool. And, considering we all breathe oxygen,
I like
and trees create oxygen for us, that's a nice thing to have. But that shows, because again, over a decade, I'm going to assume, I'm not an expert in Norway, political area, but they've had to have turnover of different parties doing different things to stay on the same page all across the board of saying, this is something as a country we want to do and maintain it for a decade. That's pretty cool.
That's pretty good. On to crime.
Oh, yes.
We
Good
like
news on crime.
But this is good news, remember. So we're talking about good news. Speaking of Europe, because we love talking about Europe, the Netherlands
Those Dutch
closed more than 20 prisons since 2009 because crime rates have fallen so much.
That's a cool trend.
Let's keep that up around the world.
I wonder what they did with them. Because
make them hotels.
Oh, that's like, what do you do with a prison? Because there's not a lot of carryover. It's not
There's
like
some
you
crazy people who would probably rent a room overnight.
Or like turn into Airbnb of some sort.
Airbnb of a prison, yeah. And on prison news, the Dutch prison population has fallen by more than 40% in the last 20 years.
That's
so
awesome.
Europe, they're getting it together over there.
Yeah. And then finally in health news, so we just kind of look about health. Australia is on track to become the first country to effectively eliminate cervical cancer as a public health problem. So vaccinations and screening, they really initiated a widespread program. And so they're pretty much eliminating that as a health problem. That's cool.
Down under.
That's cool.
Down under.
Yep.
And that's all the good news. No, there's a lot more good news.
Those are some highlights.
Good news.
Yes.
Global highlights, by the way.
That
does not even focus. Finley, Ohio's had some pretty great stuff, too.
There's a panda. We have a panda somewhere, right? Somewhere. Columbus Zoo, do they have a panda?
Columbus Zoo, I think, might. Yeah. Toledo does not.
No,
we're big Toledo Zoo people.
I love Toledo Zoo.
They are not about that. It's a little, they can't have one of everything.
No.
They're not even a major city.
But they have one of the best zoos. They continually.
I think it's my favorite zoo because
it's a good zoo.
This is a tangent on Toledo Zoo, but plug for Toledo.
Not a sponsor.
Plug for Toledo Zoo. If you want to sponsor us, hit us up. But we like the Toledo Zoo because it's A, close to home. It's 40 minutes away. But B, it's not intimidating. You can walk the entire zoo in like 2.5 hours.
And see a ton of stuff.
There's
a lot of animals.
And if you go to like big city zoo like Columbus or whatever, it's hours and hours.
That's huge.
Hours. Sorry, go Toledo.
Another one that's nice is the Fort Wayne Zoo.
I've heard
over there. That's kind of like a circular, easy to walk, pond in the middle. Nice stuff.
All right. Well, that's Q1. It's in the books.
All right.
We're sitting in the second quarter now. And we'll probably do this again here in a few months. But if you found value in our conversation, don't forget to subscribe to this podcast, The Wealth Mindset Show, on whatever platform you're listening to so you don't miss any episodes. Also, you can feel free to visit us at thewealthmindsetshow.com for more resources or show notes. And if you're ready to just learn about what we do at Hicks & Zerker Capital Management, visit hzcapital.com and check us out on social media. We're pretty active on there and we'd love to stay connected. Otherwise, thanks for listening and we'll catch up next time.
All right, see you at the zoo.
At the zoo. That's right.
Bye.
Thank you for joining us at the Wealth Mindset Show, where we tackle the complexities of finance and life planning to help you align your wealth with your values. We hope today's conversation provided value and clarity as you navigate your financial journey. Your hosts work for Hicks & Zerker Capital Management, and all opinions expressed by them or any podcast guest are solely their own and do not reflect the opinions of Hicks & Zerker Capital Management. This podcast is for informational purposes only and should not be relied upon for investment decisions. Clients of Hicks & Zerker Capital Management may maintain positions in the securities discussed in this podcast. There is no guarantee that statements, opinions, or forecasts provided herein will prove to be correct. Past performance may not be indicative of future results. Indices are not available for direct investment, and any investor attempting to mimic index performance would incur fees and expenses that could reduce returns. Securities investing involves risks, including the potential loss of principal, and there is no assurance that any investment plan or strategy will be successful.